Bitcoin is forming a special secret pattern that once broken will create a huge movement. In which direction I will reveal to you in this video. Hello ladies and gentlemen, this is Samo from MCP Paradise. In the previous video one day ago, we have been expecting that the C wave will be formed right here at our support zone. As you can see, we have beautifully retested the 0.618 Fibonacci retracement level and formed the C wave right here. Right now we are forming a special secret pattern that I will be talking about in a minute, but firstly let's go through ultra high time frame first to understand the price action with much better clarity, and that we will achieve only by analyzing Bitcoin from the highest time frame to the lowest. So subscribe not to miss any new free alerts, and let's start reminding ourselves that we have completed this impulse since $19,500 that was being formed. It was a special trend that we have been riding towards $109,000, and after that I've told you that we are changing our strategy from bullish into bearish. After that we have dropped exactly as expected towards $77,000, but there is a probability that before we start the corrective B wave in this zigzag pattern, we will go a little bit lower towards $72,000. So what is the probability of that? Firstly, we need to understand how the weekly time frame is looking at the moment. So we are still below that $85,000 resistance. As you can see, we are about probably to close another weekly candle. This will be third in a row below this important $85,000 resistance, and if that's gonna happen in 1 day and 7 hours, it will increase the probabilities from ultra high time frame perspective that we are not yet ready towards formating a corrective B wave towards our resistance zone at $93,000 before we go lower towards that $44,000 mark. Ladies and gentlemen, don't be worried, because after that we will have a new trend towards $240,000 as a grand supercycle third wave. So right now the question stays on how probable it is that we will correct a little bit lower towards that $70,000 before going higher to retest our resistance at $93,000. For that, let's zoom in into the price action of this cycle that we are forming in either leading diagonal or an impulse. So in the previous video I've been talking about that this is either the end of the fifth wave, or we are having a more complex corrective fourth wave and we will continue towards $72,000. If this is a truncated fifth wave, that means that this was an impulse. If this is an expanded triangle that I will be talking about in a minute, fourth wave, that means this pattern was indeed an leading diagonal and we will see the move towards $72,000 before having the retrace back towards $93,000. In the previous video also we have been trying to understand if this pump above our resistance trend line right here is just a fake out or a real breakout. So I've explained to you the rules for a real breakout and a fake out and what it's needed for its confirmation to say with a great confidence that this is a real breakout or just a fake out. And at the moment we can see that we are still stuck below that $85,000, below that moving average trend line, this orange trend line that is keeping us in this downtrend since around February 2025, ladies and gentlemen. So we broke above it, but the candle on a daily time frame on our high time frame chart right here failed to sustain above and turn it into a support. However, we are forming some kind of consolidation above our resistance trend line right now. So from high time frame perspective we are quite neutral. We need to see that confirmations I have been talking about in the previous videos. What is going into the pocket of bears, however, is this bearish divergence. As you can see, it is still playing out, ladies and gentlemen. We have been talking about that in the previous video as well. The price action on Bitcoin has made lower high. So you can see this was the previous high and this is a newly formed lower high. However, the indicator made higher high. What does it mean? It means that the momentum is there, right? But somebody was distributing on the move higher. So somebody kept the price from from making a higher high the same way the indicator did. If you are in our MCP free university that you can join for free on our website mycryptoparadise.com, you know exactly what I'm talking about when the indicator is making a higher high. In this case we have been using a histogram of MACD oscillator and the price action is making lower high. This is called bearish hidden divergence, alright? But for the confirmations, because we are professional traders and we are not relying only on one indicator, we have also a confirmation on our stochastic RSI, even though the slope is not that drastic as it is on the MACD histogram, but there is some divergence. And also on classic RSI we can see an exaggerated divergence with almost equal highs and price action lower high. So this is just suggesting that we should let the indicators to cool down, right? So either have some prolonged consolidation, which is unlikely based on what I will be showing you in the next windows, or we can start going drastically lower, break below this trend line again and continue towards $72,000, or there is also a possibility that we can on this bearish divergence continue to go higher and we can go towards that $93,000. However, that will mean that we will just continue building up the pressure and then the move lower towards that $44,000 will be extremely volatile. Ladies and gentlemen, right now this time frame is really neutral. We are waiting for more confirmations. However, the next time frames, they're a little bit more biased on one side and give us a great idea for a great trading tactic that we can use in a trading opportunity. So let's zoom in towards medium time frame right now. So if the fourth wave was really a more complex corrective pattern and right now we are forming an expanded triangle that, as you know from the Elliott wave theory, is one of the corrective mode waves and being subdivided into 5 smaller waves that subdivides itself into corrective mode subwaves, ladies and gentlemen. And this is the important part, because if this would be an expanded triangle, each single subwave would need to form a corrective mode wave. Alright, so the first wave, the A wave, that is seemingly a classic zigzag, right? However, if we take a look at the other actionary waves of the expanded triangle, we can see that they are more like impulses, because the slope is really horizontal and really just looks more like an impulse than some corrective mode patterns. So this is just giving a little bit more points to the bulls, because we can actually count the truncated fifth much more clearly. This is a very simple impulse 1, 2, 3, 4, 5, actually ending diagonal, because we have went with this fourth wave into the price territory of first and second wave, and that's absolutely perfect, because you know that the fifth waves of impulses that we are having on the high time frame right here, let me show you so it is understandable for you. 1, 2, 3, 4, 5, and the fifth wave subdivides itself into smaller 5 waves, 1, 2, 3, 4, 5. This might be the truncated one, so the final fifth waves of an impulse can take a place of an ending diagonal, because the fifth wave is a motive mode wave, so it can either be an impulse itself or an ending diagonal. Okay, so this would actually be a correct count, ladies and gentlemen, and seems like based on calculating the subwaves, this is much higher probability that this is really a truncated subwave. And because we have been able to successfully count the waves on this section right here on a smaller time frame, 1, 2, 3, 4, 5, extended third, this seems to be a motive mode wave, not a corrective wave that is indeed needed for expanded triangles, ladies and gentlemen. But are we taking a position just based on this information? From a swing or day trading perspective, this is not enough, right? As I have said in the previous video, on a medium time frame, to get some great confirmations, we need to see a reclaim of that $85,000 as well, or a clear breakout and reclaim of this support, changing it into a resistance, and then we will be confident that this was the expanded triangle and we are just successfully breaking below it, and we can ride the wave towards $72,000 and create a beautiful trade, right? If we change this support into a resistance, it will create for us us a beautiful trading opportunity with a great risk to reward, ladies and gentlemen, because the target would be at around $72,000 and the stop loss would be able to be positioned very tightly just below the newly created resistance zone, right? The same way, once we get a confirmation from the bullish side, we can again create a beautiful trade because we understand that this support zone is very strong. It is perfectly analyzed because, as you can see, it worked absolutely robustly. So we will be safe if we place a stop loss below that. We will be safe in the matter of, if we are really bullish, the probability of wicking out somebody from this position during some high increased volatility with some wick out or anything without turning the trend in the other way and continuing in that will be very low. So safe stop loss is that stop loss that if it's hit, the whole idea is wrong, right? However, bad stop loss is the one that is hit and then continues in the direction you wanted to go, right? Which was your idea. So that is bad stop loss. So as a professional traders, it's not just enough to have a great trading ideas. It's also very important to make sure that your entries are perfect, your exit and invalidation levels are perfect, okay? And this is exactly what we are doing in ParadiseTeam VIP, and it's the only way how you can be long-term profitable. Ladies and gentlemen, look at that. If we will have that confirmation that we are reclaiming that $85,000 and changing it into a support, then again we will be able to position ourselves after confirmations absolutely beautifully with tight stop loss and very far away exit targets. This is the art of trading, making only the beautiful highest risk to reward trades possible, okay? At the moment, however, you can see that we are consolidating in a tight range for around 2 days already. Ladies and gentlemen, this is due to multiple factors, but what I'm about to show you will be a self-explanatory that it's about to change and we are about to have a big volatile movement very soon. So first of all, what's the reason that we are consolidating in this tight range is because of the social media low activity, which you can measure with me on our website mycryptoparadise.com for free, and you can see that we are around our monthly low at 20. That means low interest into trading from retail, that means low liquidity in the markets, and that means that the market makers have a tough time to create in some big swing movements. However, as everything in life, also the social media activity is having these kind of cycles, right? And just by looking at the data from the last 30 days, we can see that the highs are always at around 60 and the lows are around below 20 before we can get a new cycle, right? So we go to 60, then we go below 20, we go to 60, then below 20, again 60, below 20. Right now, as you can see, in March 20 we hit the monthly high at 60, right? And right now we are having the cycle down. However, we have not been able to go through the cycle of staying a bit below 20. Ladies and gentlemen, that seems to be playing into the cards of bears, because as you can see, always before it gets better, it needs to go a little bit lower, a little worse, and then we can restart the cycle. So once we complete the cycle below 20, we will be able to restart the new social media activity trend, which will result in more trading liquidity and potential higher prices. So as you can see, there is a high probability that we will need to go through this below 20 period before we can go higher, and that perfectly actually synergizes with our low time frame analysis that I will be talking about right now. Before that, also keep in mind that next week there is going to be loads of crucial economic data releases, and that will also create loads of volatility and get the movements back into the market. So keeping this in mind, we can understand that from the social media trend we should have a little move lower just to get the social media trend a little bit more bearish, right? However, we also know that then we will be back at our support right here and the volatility will be incoming. That means more liquidity in the markets, and it doesn't really matter if it's going to be bearish or bullish economic data releases. What it matters is that if we are at support or at resistance, and we will be at support, yeah? So the highest probability is that this incoming liquidity will be accumulated at the support and used for buying by the market makers, which would actually pretty nicely confluence with the pattern we are forming right now. So as you can see, if this was the truncated fifth, this one right here, we have started a new motive mode wave, right? And any motive mode pattern starts with an impulsive motive mode first wave and then a secondary corrective mode wave. And if we count the subwaves on low time frame, we can actually confirm this to be an impulse, and right here after that we have finished the ABC zigzag with an extended C, so that's a low time frame cycle right here. But if we take a look at the super cycle on this time frame, it means that we have formed the first wave, now completed the second wave, and now we are about to start a motive mode third wave. So from the Elliott wave theory, if this support holds, this could play into the cards of bulls. But does it mean we will be entering a long position right here? No, it doesn't. It's not enough confirmations. Right now what's important is to take a look at the volume. As you can see, the trend right here was that we have been increasing in volume on the moves to the downside and decreasing once we go to the upside. As you can see again right here, as we move towards this support zone, we have increased in selling volume, and then once we went to the upside, we have again decreased in volume. However, right now on this latest low, we can see that the volume is not increasing that much, right? So the bears are losing strength basically. And if we analyze what we are actually forming right here, we can clearly see that this is inverted head and shoulders pattern, right? So what it's important in confirming a successful inverted head and shoulders pattern is few things. Firstly, we need to have a trend line that is broken from bearish price action and tries to attack the previous local high right here. And we have that, right? This was the trend line. We have just broken that to the upside. Second thing, we need to have left shoulder, head, and right shoulder. So as you can see right here, we are having a clear left shoulder, here we have a head, and right now it seems like we are forming a right shoulder. So right now there are a few things to keep in mind. I want to see this price action to go a little bit lower. That will nicely play to the cards of the social media sentiment that we will be going through this red phase right here. I want to see not much of an volume increase, definitely lower than on the previous low right here. I want to see the momentum getting exhausted, so I want to see a bullish divergence forming. That means that the histogram will make a lower low, however we will not break below this previous low, all right? And then I want to see an upside momentum breaking through this neckline right here, which is a textbook example on our website right here. Break, retest, and if this retest will hold with ParadiseTeam VIPs, we might position ourselves into a nice long trade, because it will just give a high probable outcome that we will be able to attack and break above this $85,000 resistance, ladies and gentlemen. So that means break, retest. Right here on this retest, it would be a nice opportunity if we have all that confirmations, if we went through that social media red phase trend. We want to have also on-chain confirmations from whales, etc. And definitely we want to see this to be holding as a support, and we will be able to create a beautiful high risk to reward trade opportunity by placing either a limit breaker right here about at $85,000, or if we will feel more aggressive right here on that retest after we will see that it's holding and we are having some impulsive reaction from there. But the most important stuff is that we will be able to place a very tight stop loss, and the targets, we know exactly where we exit before we enter a trade, and you know that as well. Right now the main resistance will be at around $93,000. So as you can see, a beautiful risk to reward opportunity for a long position. However, all these factors needs to play, because as a professional traders, knowing when you have an edge in the market and having patience and discipline to wait for the highest probability setup and then pull the trigger fearlessly, ladies and gentlemen, is the most important thing, together with doing a high probability in-depth analysis that gives you the possibility to strategize in your trading, time your entries and exits perfectly, and tactically be executing your trade setups. So ladies and gentlemen, you know that I always record videos Tuesday, Thursday and Saturday. I will see you again on Tuesday. Until then, trade smart, trade safe, and I will see you next week. Cheers.